Hello, are you in the market to buy a house? Are you in the market to sell a house? Well, either way, or even if you're thinking about maybe entering the market in the near term, wouldn't you like to know what's actually going on? Wouldn't you like to be able to make your decisions based on a lot of accurate information? Of course you would. You're going to be far better off knowing what's going on around you before you, if you will, step into the street where you might get run over by a car or a truck. You want to look both ways. Well, that's what I help people do. I am Justin Miller with the Chong Miller Group. At the Chong Miller Group, we help people buy and sell real estate. We help people build wealth through real estate, partly by being more informed than all of your potential counterparties so that you have the best reactions to what's going on out there and you know when it's safe to step off that curb and cross the street. Okay, so with the new format in 2025, I'm giving you particular actionable insight first, and then we're getting into our market updates. So this is the April 2025 market update, which means we're looking at the data, the complete set of data from March of 2025. And we're doing this as a composite view or a set of composite views across the real estate market, where we're looking at single family homes as a particular submarket, we're looking at condos as a particular submarket, and we're looking at townhomes as a particular submarket. Okay, before diving into the market update, let's talk about the actionable insight that I want to provide you in this video. So in March, I had 3 separate clients that I was helping through purchases. And as you know, if you've been watching my videos for a while, I tend to be in the top 5% of real estate agents here in the Las Vegas Valley. So I see a lot of transactions. I see a lot of different things going on with the transactions. Obviously, anytime you're representing buyers, you're looking at multiple properties to figure out what they might want to go into contract on. You're looking at different ways to potentially put deals together, etc. And if you're working with sellers, you're looking at multiple potentially showings that you're doing on behalf of those sellers, because sometimes individuals will call and want to talk to the listing agent. So I run into a whole lot of transactions. I run into a whole lot of things that are going great, not going great. And I use that to inform me and to help my clients to make sure that things are working really well for them. So something kind of weird happened in March. In March, I had 3 buyers that I was helping to represent, 3 separate transactions. All 3 of those transactions ran into significant headwinds as we got close to the closing. Now, almost all transactions actually have a small crisis that occurs at some point in time. That just seems to be the nature of the beast. A lot of times people who are selling properties are very emotionally connected to the properties that they're selling. Buyers are expending large sums of money, and so the emotion attaches to the money, the emotion attaches to the memories, and it means that most transactions end up with some small crisis. Sometimes those crises get in the way and they prevent a transaction from concluding properly. But most of the time, that's something that I, and most actually real estate agents, can help you with, because it's just a normal part of the transaction that takes place all the time. Okay, but there are other things that are interfering in the transactions. We'll get to some of that at the end of this video. But again, if you've been watching me for a long period of time, you know every single month I go into the back on market, the failed transactions, and the things that are causing some of those a lot of those failed transactions. Well, in March, none of my clients had a failed transaction. It's very rare that that happens with any of my clients. Because I'm able to protect them prospectively from the kinds of things that may occur, and I'm able to protect them through the actual occurrence of something, even if it's not exactly what we've been anticipating. Well, in March, my 3 clients all ran into different issues, and you expect that, right? But one of these issues in particular was really quite surprising to me because it had not come up before. But I anticipate it's going to start coming up a lot. And at the very least, it's going to induce delays into a transaction. We know that the current administration and its whatever it is, group that runs alongside of it, trying to cut lots of people and dollars out of the federal government. They've been making a lot of cuts that are ill-conceived, that are not well planned, irrespective of what your political beliefs are about waste and fraud and abuse in the government, irrespective of what your beliefs are about whether or not we should have a government, etc. We do have a government, and the government's supposed to operate in a particular manner. But when it does not operate in that manner, either because budgets have been slashed for particular groups or people have been slashed for particular groups, that creates challenges. It creates challenges for a lot of people, not just those federal government employees who may be laid off or let go or moved or whatever, but actually for the recipients of all of these services that those organizations usually provide. And sometimes we're really oblivious to what those services are until we become impacted by them. Well, when you're buying a property, unless you're buying for cash, you're taking out a mortgage. Probably, right? You might be borrowing money from a family member. Unusual, but it definitely happens. You're probably borrowing money. You're probably borrowing money from some commercial institution as opposed to a private lender. Okay? So that's good. If you're using cash to buy your property, you're probably going to have to go through an additional set of disclosures about where that cash has come from, right? You can't just go and spend $500,000 in cash one day and not have some people asking questions about it. It may be completely legitimate, but you may very well get a FinCEN notice trying to find out information about the participants to a transaction. And that could be because they're in a limited liability company and the ownership isn't clear. It could be because it's an all cash transaction. Anyhow, these FinCEN notices, the response to those is some extra paperwork. Easy enough to get through, but you run into this governmental issue that you have to resolve. If you're not using cash, then you need to resolve some other issues, and that is you need to find a lender, you need to go through the underwriting process with that lender after application, and the lender needs to approve you and decide to fund the loan. A part of that process that all commercial lenders are asking to see verification of the stuff that you report to them, verification of income, verification of debts, and etc. Well, that verification of income, how do you prove that? It's kind of interesting, right? The bank initially asks you, please give me your last 2 pay stubs, or give me your last W-2, your tax form, or give me a whole bunch of other things, right? Maybe bank statements, depending on the manner in which you're qualifying for this loan. Some people are creative and clever and able to put together things that look like bank statements. It's actually comical how badly most people put together these fake statements. You can look at one and within a second or two, you can probably figure out, and certainly within 5 seconds, you're going to know that's a fake. But there are some people who do really good work, right? And they put together things that are basically counterfeit documents. Well, banks are incredibly conservative. I don't mean that politically, but rather in terms of avoiding risk. Banks are incredibly risk intolerant. And so they like to see multiple versions of the same thing. Well, how are they going to get those multiple versions? They're going to ask you for your pay stubs. Then they're going to ask you for your W-2 or your 1099, whatever the tax form is. And they're going to compare those. They may ask for bank statements so they can see the money going in to the bank, the money that your pay stub says should be going into that bank, right? If a different amount's going in, they're going to want to know where that different amount's going, okay? But that's not sufficient for a bank, for a lender. They're going to contact the IRS and they're going to ask for your tax transcript. One of the forms that the lender is actually going to make you sign is a release of your tax transcript so that they can take that to the IRS and get the IRS to release to the bank your tax transcript. Okay, that all seems very detail oriented and quite doable at the end, right? And it is, except a whole bunch of people have been laid off from the IRS. What does that mean? It means the IRS has become much less capable of fulfilling requests. Now you might think all these things just happen, electronically behind the scenes, and some lender presses a button and they simply receive it from the IRS. Well, that's not true. Tax documents are some of the most protected, personally identifiable information that exists on you, right? There's a couple of other types of documents that the government has looking at, let's say, your medical insurance issues, your social security issues, but tax documents, extremely protected. They're updated every single year, maybe more than once a year. They're updated from multiple different locations into your file. So the IRS knows who your employer is, how much you're making, how much tax is being withheld, how much tax you're actually paying. They know your address, they know your email address, they know your bank information, et cetera, et cetera. This data is extremely protected. Well, what that means is you sign the tax transcript permission, if you will. That goes to your bank. Your bank sends that off to the IRS, and the IRS has to then figure out, okay, is this legitimate to respond to? Tap into the appropriate system, get that stuff, and send it back to the bank. Now you can start to see, I think I know where this is going. Yeah, where this is going is, this is a part of every single real estate purchase transaction that involves a loan. That's a lot of transactions across the entire country, right? So the IRS gets a lot of these requests, and they're not able to keep up with them any longer. The ability to process these requests is slowing down. So for the first time ever in all of the time I've been practicing real estate, I had a transaction in March for a client, and we had to delay closing by a week because the bank had not been able to get the IRS tax transcript for this particular buyer in a timely manner. Right? There's a particular set of time during which the IRS has to provide this. But it's not a default sort of, if we don't get it, we'll just say it's fine. The lender has to get it, no matter how long it takes. And if they can't get it, there's no loan. Now, the actionable insight then is, while it's been customary over the past years here in Las Vegas and in many other parts of the country to try to do length of escrows, contract lengths, it being about 30 days. Know that the 30-day timeline is effectively coming under attack by an inability for the IRS to process the information requests sufficiently quickly. Okay? What that means is you, can expect your transaction is likely to be delayed. It may not be, right? You may happen to be hitting some particular clerk at the IRS at exactly the right time, and they respond to you super quickly like they had before. The IRS is presumably going to be losing a lot of additional people over the next 1 or 2 months. And of course, they're getting busy right now getting in all the tax receipts that they normally get in April. This likely means the IRS will become further overwhelmed, and we will be experiencing further delays in the processing of those requests. That means you get to the end of your transaction, your escrow period, and you're going to need to ask for an extension on the close of escrow. You might need to ask for a week. You might need to ask for 2 weeks to be able to get the IRS enough time to process this tax transcript request that your bank needs before they can actually fund the loan. You could do this proactively. You could decide, let's not try for that 30-day close because it's a risky proposition right now. Let's negotiate. We're going to do a 40-day close. Okay, costs and benefits on both sides. If you negotiate the 30-day close and you get to the end, the seller is probably going to be caught off guard and very upset. and the seller could cancel your transaction. Not particularly likely, but they could. They could think that you're like pulling the wool over their eyes and they're like, I'm out of here. We'll go find someone else. Okay. But even if they don't cancel the transaction, what could they do? Well, they're suddenly given a lot of negotiating power, and they could say something like, you need to release your earnest money to me. It needs to go into my personal account. Out of trust at the escrow company, it needs to go into my personal account. Otherwise, I'll dump you out of contract. Or they might say other things like, you've effectively reopened the negotiation. We no longer have the exact transaction that we thought we were going to have. Prices, I noticed, have gone up another 0.5% between when we entered contract and now. And I'll still sell you the property, but you're going to need to pay me an extra 0.5%. Now, those kinds of negotiations can be problematic. They may be best avoided. So you want to be thinking really carefully about those if you decide and your agent you're working with decides, we'll just do a standard 30-day close. Make sure you're talking to your agent about this. It may be preferable to say, let's go with a 35-day close or a 40-day close so we're less likely to run into this problem. The contract is more likely to cohere. Now, the drawback is the 30-day standard escrow has become so common that a lot of sellers will look at, especially if there's multiple offers, that seems long. Why does the buyer need that much extra time, an extra 5 or 10 days? Especially, again, if there's multiple offers. Your agent, your buyer's agent, needs to be able to explain to the listing agent, who will explain to their seller, hopefully, what's actually going on and why you're asking for this longer close of escrow date, this further out date, so a longer escrow. That way you're more protected, because if you get into that contract, seller already knows, this is going to take a little bit longer, and it's not the buyer's fault, not even the buyer's lender's fault. This is because of something going on with the IRS, because the IRS has come under attack and it's losing lots of people, and it's not able to process requests as quickly as they had in the past, right? So there's some positives and negatives associated with either of those strategies. You, as Actionable Insight, if you're a buyer, you need to be talking to your agent to ask them specifically, how are we going to deal with this this negative timeline impact that the IRS is experiencing? And by the way, if you're a seller and you're talking to your listing agent, you should be asking this question as well. I know it's normally 30 days, whatever, but how likely are we to run into a delay? Because the delay might really negatively impact you as a seller, because you might need to close to be able to go on to do your next purchase. Right? So this has the potential to ripple through a whole chain of transactions across multiple parties. Heads up, right? Actionable Insight, heads up. The IRS processing timelines are taking longer, and they're causing delays in closings of transactions that will, at the margin, increase the number of failed transactions. Not very many, but it will increase the costs of those transactions, as I've outlined. Okay, so that's the Actionable Insight. Let's go ahead and talk about the data now from the month of March and get into the market update. Now, remember last month I decided what I was going to do is I'm going to do the single family, the condo, and the townhomes all together in a single video where I'm doing them comparatively. I'm still segregating them so you see what the individual market subsegments are doing or sectors are doing, because they're each distinctive, but this way we get to be in a little bit quicker period of time. It's a little bit easier to get the videos recorded and out to you all so that they're interesting and informative to you in a timely manner. Okay, first thing, I do want to talk about interest rates. And I do want you to realize, right, this video, all the data has been pulled on the 7th of April. As I'm recording this, it's the 8th of April. Hopefully I'll get it out shortly, meaning later today. A lot of you won't see it until a little bit later, whatever, that doesn't matter. You can be looking at this a year from now, going back and checking to see what was actually going on if you want. But in on April 2nd, we all got to experience Liberation Day. I mean, sorry. Irrespective of, again, your thoughts about Liberation Day and the people who bring Liberation Day to all of us, whether we want it or not, there's been effectively a discontinuity that's been imposed on the U.S. economy, in fact, on the world economy as of April 2nd. What's a discontinuity? There's actually a specific mathematical understanding of what that means. There's a statistical understanding, which is the same as a mathematical understanding. There is an economic understanding, same as a mathematical understanding. A discontinuity is a break, a separation in a trajectory. Right now, a trajectory may be straight up or straight down, it may be diagonal, it may be curved, it may be curvilinear with multiple different functions, okay? So there's a bunch of ways to describe a curve depending on the shape of the curve. But there are times where there'll be just simply a break in the curve, where something may be tracking generally up, but with dips and valleys and peaks, and then suddenly there's a drop off, and then the curve recommences from a different location. That's a break. It's a break in the curve. It cannot be described mathematically with the functional form for what had been going on or what comes after. Well, the U.S. has always been the most open economy in the world. And as a part of that, it's also had the freest trade systems in the world, meaning lots and lots and lots of exports from the U.S. throughout the world, and lots and lots and lots of imports coming into the U.S. from throughout the world. This has been part of the so-called liberal economic order and trade order that the U.S. put into place, along with some allies, at the end of World War II. This was a very substantial change from what had existed prior to World War II and led us actually into the Great Depression. And it's one of the reasons why the U.S. decided to create this liberal economic order, this liberal trade order across the world for free trade. Now, free trade wasn't always free. It hasn't ever actually always been free, but rather it's been a continual decrease in a timely, thoughtful manner in the level of trade restrictions that exist between countries. Some countries, the liberalization of trade has been at a much slower pace than other countries. And we could think of the U.S. as being a free trade union itself, right? We have 50 states and D.C., and within those 50 states and DC, there are no trade barriers. Now, obviously, things have to move distances, and so there's transportation costs, communication costs, but there is no extra charge on maple syrup coming from Maine going into California or Nevada than there is on maple syrup going into New Hampshire from Maine, right? So it's the U.S. is a free trade union. And in fact, barriers to trade in the U.S. are constitutionally disallowed. They cannot exist. If they do exist, one state sues another on a constitutional claim, and those trade barriers have to be completely removed. Well, between the U.S. and some other countries, we have effectively the same thing for trade. For other countries, right, there are different levels of tariffs and non-tariff based trade barriers, right? Subsidization from a government for the particular industry in one country as opposed to another country. So there's unfair trade barriers and tariff barriers that exist throughout the world. Most of the world competes according to the rules that have been laid out over time, mostly by the U.S. and through its international order, which had been called GATT, the General Agreement on Trade and Tariffs. And more recently became the WTO, the World Trade Organization. But those are US created organizations to implement a liberalized trade order across the world. At Liberation Day, April 2nd, that's all gone. Now, maybe it'll come back in a week. I don't know, maybe it'll be back before you watch this video. Incredibly unlikely for a variety of reasons. And even if it does, for a day or two, come back, the rest of the world has seen we now, the US now, has breached, can breach, and will breach the liberal trade order that's existed since the 1940s. Which means that we'll see some countries may lower tariffs one day and increase them the next day. We'll see more subsidization, tax relief from some countries to their particular preferred industries. That's what's going to happen from here on into the future, right? To go back to where we were prior to April 2nd wouldn't happen for at least half a dozen years, irrespective of what's going on with an administration in Washington. It just simply won't. And it could take 20 years to restore if that's the direction that the world would want to go, right? And by the way, why do some countries have tariffs and or non-tariff barriers to trade? They might want to protect their own industries. They might want to protect their consumers for various reasons, right? We know that actually information can be locked down at some countries so that X or Blue Sky or whatever is not allowed into those particular countries, right? So information becomes captive of the same kind of thing. Digital goods, physical goods, agricultural goods, these are all subject to more significant, larger levels of control for flow across countries now than they had been prior to April 2nd of 2025. That's the reality. Now, I tell you that kind of as background for all the data I'm going to give you from March predates clearly April 2nd. At April 2nd, we have a discontinuity, a break that occurs in the economy of the world. Now, break doesn't mean broken. It just means that we've moved from one curve to another curve. Maybe it's a higher curve. It's not, but it theoretically could be, right? Well, that break in the economy creates a massive level of uncertainty, and that massive level of uncertainty will have significant ramifications as we move forward. It means that while I'm going to be giving you March information, you need to be thinking about March as the old world, and there's a new world that's now upon us. There will be some people who will pretend and act as though, oh, everything's the same. There will be some people who will slowly learn to accommodate the new world order. And so that will lead to some level of what seems to be continuity for a while until that breaks down in the face of the reality that actually things have changed. They've changed dramatically. They've changed with a break or discontinuity. Okay, so I just want to warn you that. So as I give you the March data, it's still interesting, it's still relevant, it tells us what had been going on in the housing market. It may be that some parts of the housing market really change as we move forward in time. So be prepared for that. So first thing about the housing market, I want to talk about interest rates. So interest rates had been last year around 7.0% plus or minus 0.3 for the entirety of 2024. I've said that to you many times, so you know that. We did see in September mortgage interest rates, 30-year mortgage interest rates, come down to about 6.7%. And then they went back up, right? That happened over about a 6-week period, 3 weeks down, 3 weeks back up. And we ended the year back basically where we started 2024 at 7.0%. All right, so what's been going on over the past 3 months of 2025? we've seen interest rates kind of slowly coming down just a little bit, right? And so in January, I forget what the exact number was, but I think we'd come down to 6.93%. So we'd come down about 0.07 of a basis point, 0.07%. Very, very little. In February, came down slightly more. In March, we actually had come down to 6.71%. We went up to 6.72%. And we went back up to 6.73%. Now, these are the national averages for 30-year fixed rate loans, mortgages, according to the Mortgage Bankers Association. And then the last week of March, we came back down again to 6.72%. Okay, so that means rates were flat, right? So a 1/100th of a point or 1 basis point on a mortgage rate for, let's say, the median priced home, that's going to cost you more or save you less than $1 a month, right? So the at the high in March and at the low in March, you're looking at a relatively more expensive or less expensive at the same purchase price by about $1 a month, because we had moved 3 basis points up and down, right? Very, very flat, inconsequential. Okay, so that's the background. Rates are not going down. Rates are not going up. They're just kind of hanging out, and they're floating slightly a little bit lower. And what that means then for what we saw in March for residential real estate here in Las Vegas, single family homes, price went higher, not by a lot, went higher by $2,500. That's up 0.5% to $475,000. That's the median sold price for single family homes in the Las Vegas Valley. So with uncertainty, with high interest rates, etc., and with high purchase prices, right? Prices still went higher. They went higher by $2,500. That's also up 3.2% year over year. What about condos? Condo prices actually came down. They came down from $240 to $235. They came down by $5,000 or 2.1%. They're also down 2.5% year over year. So condo prices not performing really brilliantly right now. You could think of this as condo prices have found themselves stuck in a trading range between sort of 230 and 240, and they've been hovering back and forth in this range for quite a while now, actually for a year. So they're not really going up. They're also not really going down, right? They happen to be down $5,000 in March, but they're not really trading lower. There's just different random transactions that are happening every month, and those transactions are moving around kind of a center line around 240, but they came down to 235 or $5,000 in March. What about townhomes? Well, townhomes did quite well. Townhomes, median sold price $344,900, up $4,900 from the month prior, or up 1.4%. They're up 3.9% year over year. So townhomes performing better in March than any of the other submarkets in Las Vegas real estate. Okay, we've seen townhomes actually, as a general proposition, doing quite well over the past year. Market insight, I look at price per foot to see sort of the internals of the market. So within the single family home space, price per foot went up $3 a foot at the median. They had actually gone down $4 a foot the prior month, but they went back up $3 a foot. So that means that for single family homes, the price per foot was tracking along very closely to what we saw for median purchase price, median sold price in March. That suggests, now it's a 1 month of data, so there's not necessarily a trend in place, but that suggests that across the whole single family housing complex for March, we were actually seeing the upper and lower end moving pretty much in tandem. We'd been seeing the upper end having more challenge recently, but that seemed to have been eliminated in the month of March. So that's good news. So what about transactions? What about number of houses that sold in March, number of properties? Well, we want to make sure there's some, because otherwise it'd be really bad, right? If there's only one that sells, it doesn't really matter what the price is. It's really bad, right? Maybe there's a lot. Well, let's go ahead and take a look at it. Single family residential, there's the single family houses in March sold in the Las Vegas metropolitan statistical area, the valley plus a little bit of stuff around it, 1,937. That's up. It's up 361 houses from what sold in February. It's up a pretty strong 22.9%. It's also up 7.07% from year over year, so from March of 2024. Remember, March of 2024, really, really low, right? So that we're up 7% from that, that's great. That we're up 22.9% month over month, that's great. It helps to highlight how weak February was for home sales here in the Las Vegas Valley. What about condos? Well, condos, even though we saw prices come down, we actually saw the number of condo transactions go up. 261, it's up 24 or 9.7% from what we saw in February. It is down 21.6% from what we had seen last March, year over year. Condos had done relatively well. They had been sort of the best performing market subsector for most all of 2024. And so now we're saying, okay, well, we did well last year. We're giving back some of those advantages this year, but we are up 24 month over month, 9.7%. Townhomes, 244. That's up 33 or 24.5% month over month. It's also up 21.4% year over year. So townhomes, not just for pricing, but also for a number of transactions, strongest subsector in the housing market here in Las Vegas in March of 2025. Now, I do want to comment that A, we're coming off low numbers, and B, these increases in sales, we would expect these because of seasonally increasing sales that take place in February and in March and in April and May and June. And so we're not actually seeing as much growth as we would like to see here. Not only are the numbers remaining low on sort of an historical basis, but the growth rates are a little bit less than we might be hoping to see. So still a little bit challenged in terms of the number of transactions, even relative to what we've been seeing in 2023, the lowest transaction volume year since 95, and in 2024, the second lowest transaction volume year since 95. Now, pending insights. This is good. Pending is up in all submarkets. So that tells us that we're going to see more growth for the April numbers, assuming actually we get through the discontinuity in the economy and things just simply plow forward, right? So there's an assumption there. It could happen, but we do have this incredibly strong seasonal impact that we get at this time every year, and that seasonal impact probably is sufficient to get us over the hump that we actually do see growth in transactions during the month of April when we get there. All right, but so we get these sales, right? Obviously, some people can rent properties, right? That's a different transaction. I don't look at those transactions within the data analyses that I do every month. There's something else that can take place though, right? There's another type of sale that can take place, and that is a foreclosure sale. And I don't like talking about these for a variety of reasons, but I'll just mention to you really quickly. The number of single family houses that sold at foreclosure in the Las Vegas metropolitan statistical area in March was 0. The number of condos that sold at foreclosure in March, 0. And the number of townhomes that sold at foreclosure in March, zero. And not only that, right? And you may have been reading and hearing all sorts of people talk about, oh, amazing deals in foreclosures, blah, blah, blah. We have had zero single-family residential foreclosure sales occur throughout the entirety of Q1 of 2025. That's January, February, and March. The same thing, Q1 condos, Q1 townhomes, not a single closed sale for foreclosure activity in the Las Vegas Valley. So, all right, they're not coming. They're not coming. It's whoever you may be hearing stuff about foreclosures. They're just lying to you. It ain't happening, right? And there are a lot of people out there who want to lie to you about a whole lot of different stuff. You need to seriously really ask yourself questions about whether or not something is trustworthy, right? Collect some information, listen to some source of people, right? You don't have to only listen to me, clearly. You're fine listening to me because I'm actually really knowledgeable about what I'm talking about, and I'm not trying to mislead you. But feel free to go listen to some other people if you want to. But then ask yourself, does anything make sense? And is anything tracking over time? And I invite people every year to go back and look at my prior year market forecast and the year in review and make comparisons between what I suggested would happen and what actually happened. You don't listen to other people telling you to do that because they're not telling you to do that. In fact, some of them even pull down their old videos. Go back and check, see what it is. My record is very consistent and very successful in terms of telling you what's going to be happening. And consequently, it's also very successful in helping my clients get into contracts, stay in contracts, get through contracts, and succeed in the purchasing and selling of property. All right, so next thing, right, we've talked about demand. Demand measured by the actual closed transactions, because you don't get a closed transaction without a buyer, all right? So let's talk about supply, right? We can measure supply with inventory because houses actually get listed into the multiple listing service for sale. And so we can see how many of those there are, all right? Single family residential, number of for sale listed sitting in inventory for sale houses at the end of March, 5,622. Maybe it sounds all by itself just like it's kind of a big number. And by the way, I'm a buyer and I only need one, right? Well, it's not a big number. And maybe you only need one, but the one you need may not be in that 5,622. But let's look at that number in context. That number is down 2.0%. It's down 112 houses. We should be seeing the biggest growth of the year in inventory happening in March. And we came down in inventory. Now, we should have inventory growing January, February, March, April, May, and June. But historically, the biggest month of growth is March. And our inventory came down, right? And remember, it's not just that our inventory came down. Sales increased by 22.9% in March relative to February. And inventory came down. Anyone telling you, any place you're hearing, oh, there's lots of new inventory in the market, the market's just, there's so much inventory, prices are going to be going down, blah, 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 shoot them. Okay, don't really shoot them, but just, pretend like you're shooting them. They're really not accurate, honest, helpful people. They are just diluting you by being dishonest with you. Now, we came down 2.0% month over month for single family residential inventory. We are up a lot from last year where we had just astoundingly low inventory. We're up 30.9% year over year. Okay, great, but we came down In March, 2.0%, 112 single-family houses. Now, condos, we did go up in inventory for condos. We increased the number of for sale condos by 19. We're in a metropolitan statistical area of about 2.5 million people. Even in the valley, 2.4 million people. We got 19 extra condos for sale in March relative to February. We're up 1.4%. Yeah, that's that. Now we are way up year over year, 36.3%. Okay, great. Townhomes. What happened with townhomes? Inventory also increased in townhomes. They went up to 904. They went up by 56. That's up 6.6%. Now, before you get too excited about that, we should be seeing 10, 15% increases in inventory at this time every year. We went up 6.6% in townhomes to 904. And that's the strongest inventory increase we had across all of the market segments of Las Vegas, single family condo and townhomes. We are up a really astounding 83.3% year over year. It just highlights how horribly bad inventory was last year. Now, what about new listings, right? The insight kind of looking forward in time. We get new listings every month. That's a seller decides, it's time, I'm selling. And so they list their property into the multiple listing service with an agent. Well, except for townhomes, which did increase a lot, right? New listings increased a lot for townhomes. Seasonally, appropriately, newly listed rose only very marginally in March for single family homes and for condos. We don't see in that data, we don't see a lot of new inventory coming in April, even though April should be the other strongest month of inventory growth every year. We're not seeing it. Okay, but it gets worse, right? And I've done this for the last several months because it's both fascinating in terms of what's actually going on and what's being said. And it's incredibly insightful in terms of the disconnect between buyers and sellers, the disconnect that is being perpetrated by listing agents vis-a-vis the market. So we know 5,622 single family homes that were listed in inventory, that existed in inventory, not newly listed, existed in inventory during March of 2025. And we know that the median sold price was in March was $475,000. Okay? That inventory, 5,622. The median list price, not sold price, these are just listed. Median list price, current list price, not initially and that changed, current list price, $576,000. That's literally $101,000 above the median sold price, is what was sitting in inventory at the end of March of 2025. Yeah, there's 5,622 of them. And at the median, they're $101,000 higher than what's actually been selling in the marketplace. Now, that doesn't mean every single house in there is $101,000 too high. Some are priced correctly. There may even be a couple that are priced low, right? But for every one that's priced correctly or low, that means others are priced even that much higher than the median, right? To be able to pull the numbers back. So $101,000 higher than the median sold price. Now, if we normalize the listings to the solds, right? We take the listing data, we renormalize those prices. We actually find out that valid pricing, now this is not done at the micro level, so we don't know that valid pricing is an actually on the specific property piece of information. But in the aggregate, the correct pricing exists on 3,092 single-family homes. That's it, right? 3,092. That's only 60.3% of the stuff sitting in inventory is priced right. Less than 2/3 of what's sitting in inventory is priced right. So you might be looking for a 3-bedroom home with 2 baths and a 2-car garage and a little yard in front and a pool in the back. And you might be thinking, it's kind of an average home and it's going to cost me something kind of like $470, $475, maybe a little higher, a little lower, depending on condition, the particular area in the valley, the age of the property, et cetera, et cetera. Okay, maybe, and this is not an absolute range, but maybe it should be priced something kind of between 400 and 510, right? And that's where you're looking in that price range. Something that's priced 101,000 too high at 576, you're not going to see it. Your agent may or may not see it, right? Most people don't go into the data to look for, give me all 3 bedrooms. They're going to focus on a price range, right? You don't want to focus too low, because if you're too low, you're going to spend a lot of time looking at things that don't match your criteria whatsoever. You're not going to want to focus too high, because what difference does it make if there happens to be one of those in Dragon Ridge priced at $18 million, right? You're probably not the candidate for buying that property. So it just doesn't matter. You don't want to waste your time looking through a list of 5,000 houses to see just the few that actually are going to be relevant to you. So you're not going to find them in your search. And even if you find them in your search, it's just a chuckle about, oh, that's just so stupid. What are those people thinking? So if you're a listing agent and you're helping your client price it, whatever, you're doing them a huge disservice. And by the way, if you got a buyer who came along and gave you an offer and went into contract on something that's 70,000 overpriced or 101,000 overpriced, but the buyer really wanted it and they have to take a loan, there's going to have to be an appraisal, and the appraisal is going to fail by a lot, right? And then your buyer client is going to be really upset with you, because how in the world could you get them into a contract that fails by $100,000 on an appraisal? I mean, you look like a jerk, right? You look like an idiot. It's really bad when you look like an idiot and a jerk, right? So if you're representing buyers, you need to be aware, obviously, of what's taking place in the market, what prices are. And if you're representing sellers, you need to be equally aware. You don't get to just say, okay, seller, if that's what you want, we'll put it there. Because you're not helping your seller whatsoever. Yeah, maybe you're getting a listing, so you got that little feather in your cap. Maybe you get your sign in the yard, you get that little feather in your cap, but you're harming your seller. Presumably, they're not just wanting to put something on the market to say, oh, look how expensive my house is, but rather they actually want to probably sell it. So anyhow, this means 3,092, our actual inventory in Las Vegas, is less than a third. It's actually just about 30% of what is normal inventory in the market. And we're in the spring inventory building season. We've got a really big inventory problem. The inventory problem is not going away. The inventory problem manifests for multiple different reasons. And you want to be understanding what those reasons are. But the presumptive inventory based on these bigger numbers that only an analyst is ever going to find, because they're the only ones who are going to look at the market in this totality. It's fake. It's fake. It's not real stuff. Yeah. By the way, I noticed last month, and I note to you again, in all of the single-family housing inventory, there's only 2 properties that are listed below 200,000. Actually, one of them is listed just below 100,000, which seems like it'd be scary. The other that's listed below 200,000 was listed last month. So for some reason, that very inexpensive house hadn't sold. I haven't gone to look at the house. I don't know what it looks like or where it is or whatever. But anyhow, there's only 2 below 200,000. There's only 27 total. Of that 5,622, there's only 27 that are priced below $300,000. You know, I don't know that any of them are priced right. They might be priced too low. They might be priced too high based on what they actually are. It's just kind of an interesting anecdote that I tell you just so you have an understanding that if you're thinking about buying a house in foreclosure or not for, $285,000, not going to happen in all likelihood. So, you want to be realistic. Now, obviously, median price on condos at $235,000, median price on townhomes at $344,900. You have opportunities to be buying properties at prices that are obviously much lower than for single-family homes. But on a single-family home, you're just not getting something below $300,000 in Las Vegas Valley. It's not happening. All right, one other statistic back on market. I look at this every month, have been since early mid 2020, and this continues to be hugely problematic. Single family, there were 718 houses that fell out of contract and went back on the market. Now, we ideally would be able to know how many total fell out of contract. This is an undercount. It's only that subset that fell out of market and then went back into contract. That's the largest subset of that group, but it's not 100%. I cannot quantify that residual, but at least 718 single-family purchase contracts collapsed because that's the number that came back into the market. That's 27.0% of all single-family homes that fell out of contract. It's horrible. For condos, 106, 28.8% of all condo contracts fell apart and the condos came back into the market. 86 failed contracts back on market contracts for townhomes, 26.1%. And 26.1% is actually on the lower side of what we've seen over the past 5 years. But it's horrible. It's a horrible number, right? Every single contract that collapses, whether it comes back into the market or not, that's a failure for a seller, it's a failure for a buyer. It's a really bad situation to allow it to occur. Some contracts are going to fail and there's nothing that can be done about it. The majority of these could actually be rescued if a buyer's agent and listing agent worked collaboratively to help their clients understand what can be done to solve these problems. And it just obviously isn't happening, right? And part of it is warning your clients ahead of time what's actually going to be taking place, what may take place, where failures are arising. We really need to step up our game, right? And make sure that we're really helping our clients understand prospectively and deal with things proactively when those things actually come to occur, and finding solutions on things that we weren't even really expecting, like delay for getting the IRS tax transcript and what the implications of that are. It's an interesting thing out there. Anyhow, that is the residential market update for Las Vegas Valley. I am Justin Miller, co-founder and principal of the Chong Miller Group. At the Chong Miller Group, we help people get into contract to purchase or sell a home. We help people get through the contract. We help close the contract for our clients. We help people build wealth through real estate. Please reach out with any questions you may have. Feel free to leave comments. Please share these videos with your friends, your neighbors, your colleagues, your family members, anyone that you can think of who might benefit by having accurate information and insights that can be utilized in the market to actually give them better outcomes. We're very helpful and expert in the dealing with our clients, and it works really well. And that's one of the reasons why we're consistently in the top 5% of real estate agents in Las Vegas Valley. So, all right, I look forward to seeing you in real life or in the next video. Thanks.